Welcome back to Invest with Peter Arts. Again, guys, today I'm going to be talking about why I believe market is going to change direction. But before then, let's just quickly talk about what's been happening in the market, what's been happening, to our portfolio. I guarantee you there's no one who's been investing for 2-3 years that hasn't got a position that is actually red in their portfolio. Everyone has got the big red position in our portfolio. But who cares? Who cares? Why do you want to worry? Why do you think about it every time? You don't have to. All right, this is the genesis of the problem, right? Now, US printed $6.7 trillion from 2020 2021. $6.7 trillion was printed by United States government. And this was actually given out, COVID relief, this and that was given out to people. And guess what happened when money is everywhere? Inflation pops up. So the inflation came and they were like, oh, let's blame it on this, let's blame it on that. Why do we blame these on countries or situation or conditions that we go through where we actually know we are the one who created this inflation for ourselves? I'm not saying some country issue, geopolitical issue, it's not to be blamed on this issue, but notwithstanding, don't let us put all the blame on this geopolitical issue and all the things going around the world, because I actually believe the problem was created. So when US actually printed this money, it was given out. And from there, we're talking about, COVID this, COVID that, China is not ready to open up fully and zero tolerance on COVID, bringing the market down as well. The market is just struggling, not going to rally, not going to move, that side, it goes red and all that. And we've been dealing with these since 2021 up till date, right? And now again, Russia invasion of Ukraine didn't help either, right? Everything has been going wrong. Everything you think that can go wrong has already gone wrong, right? To the extent that the bad news has become a good news in the stock market. When they want people to lose their job, they want people to be looking for job and not getting one to actually help the economy, bringing down the inflation. Is that actually good news? That is a bad news, which the market called bad news becoming a good news to the market, because that's what they want. FOMC came out last week. Jerome Powell said, well, this and that, we are going to be, pushing 75 basis points, but we're going to reduce our rates. The rate that we raise rate will be reduced. It didn't say specifically what number we should be expecting for next month, but he said we are looking at that in as much, things go the way we want it to go. We're looking at reducing the rate as we're raising this rate. So the condition around that, people have been saying it's going to be probably 50 basis points. Some people are even suggesting 25 basis points for December, rate. And things have been going, all over the place. Market don't know where to go. And we've been on this now. Job market came on Friday again. And, job report, unemployment report went up by 3.7, which Feds actually want. So that's a good news for the Feds, right? So then I say, well, what about the numbers? So the 291,000 jobs were actually filled, and market was expecting 193,000. So it was actually more than what market wanted. So, well, it was a mixed bag. Good news, bad news. Market don't know where to go. Now, things are going to change very, very quickly. And this is what's going to be the caveat that's going to direct the market for the next move. And these are the things I'll be talking about. But before I go in there, if you see me for the first time, please subscribe to the channel, like, and put your comment down below. I'll be explaining to you today where I think the market is going to be going towards now and, next year, right? Everybody's been saying, well, recession this, recession that. There's these people on YouTube, I don't even know, all the dish out is negative. Well, market recession is going to go down minus 50%, minus 70%, this and that. They're trying to scare people away from investing. Guys, do not get discouraged by these people. If you watch them, some of them have got 300,000 subscribers, 500,000 subscribers. Some of them go 1.2, 1.3 million subscribers. But every time you look at them, they keep pushing out, yes, recession is, unavoidable at this point. Yeah, housing market is going to collapse totally. They've been saying about China, right? Like, China is going to collapse. There's no way China is getting out of these. Guess what? China economy has been resilient even more than the Western economy, right? Imagine that Western economy has been locked down or probably zero COVID tolerance for the past 2 years. Tell me what's going to be happening now. We will be in a damaging recession at this point if we have no open our economy up. And look at China. I don't know how they're managing to do that. Zero COVID tolerance. And the economy is not that bad. If we look at it, it's not that bad. But they've been saying negative, get out of China, Chinese stocks. And look, I was like, wait, the way you're looking at this thing is different. The economic strategy Chinese are using is quite different from the Western way, right? And now there's a rumor now going about that Chinese economy is going to be opening up very, very soon.
Good news for folks in Shanghai, Beijing, and thousands of other cities and towns across China. And that is the potential end, finally, of China's painful zero COVID policy. Now, these are hopes, but they're just hopes right now. But those hopes are helping stocks. Eunice Yoon is in Beijing with the latest on the ground of what we're seeing and hearing. Eunice.
Thanks so much, Brian. Well, officially, of course, zero COVID is the policy here, but there was what appeared to be a bit of a shift in the public messaging, which could potentially lay the groundwork for an exit to zero COVID. An epidemiologist who was formerly with the Chinese CDC told a City event that the policy would see, quote, substantive changes within 6 months, citing progress on homegrown vaccines. Also, the official People's Daily reported that the effects of long COVID are mild and said that controls should be precise, they said, not full-blown lockdowns over single cases. Now, zero COVID has not only been constraining for the economy, but also on government finances, especially local. Several local governments actually announced this week that they're going to start charging for tests. Now, there are still signs, though, that the Chinese are only willing to go so far. In a visit to China by the German chancellor to Beijing in order to meet President Xi Jinping, the chancellor announced that China has agreed to approve the import of the BioNTech vaccine, but only, Brian, for foreign residents, so not to be widely dispersed among the Chinese population.
Yeah, you guys still don't have the Western vaccines. But listen, Eunice, first off, it's almost year 3. I mean, I can't imagine what you guys have gone through, these lockdowns, mental health-wise, everything else. But from an economic point of view,
towards now till March next year, everything will be opening up. And that's why you see the market, Chinese market and Asian market rally on that news alone. Hong Kong, stock exchange went up from that news and start running with that news. And that's why you see O'Neill and all these Alibaba Chinese stocks start going up crazy like that. So imagine China economy open up fully. And, with all this, all right, another one we need to look at is the midterm election. Midterm election is this week, right? This week, we're going to have either Democrat or Republican taking the whole House and the Senate, or it's just like 50-50, when we have a stalemate, then somebody have to vote and to get that thing done, right? So we're expecting the results come out by, before end of this week. We're gonna know or understand, or we're gonna see what's gonna happen there. But I believe to their own favor, expect market to stay strong and rally on that news as well. So that's not where I'm going, right? Because I don't want to be political on this one. All right. So I just want to give it out straight away and move on to the next one. So regardless of what happened in this midterm, market always rally after the midterm election. So not before, but after midterm election, market always rally because market don't like uncertainty. That's why market always rally. So if Republican manage to get his Senate and lower house, then that means Biden will not be able to push all his agenda, spending money on Ukraine and, spend money on climate change, all this stuff that Biden is pushing now. He may not be able to do it when the House is divided and probably Republicans take the whole House. It's going to go to stalemate and that will be hit till 2024. Market won't die anyway. Market don't want any news. Market just wants stability. So that brings about stability to some extent, and market always like stability in the market. Now let's go to what's going on in Europe now. Well, 40% of cities in Ukraine are without power. At this point, Russia has bombarded most of the cities to the extent that the power grid is out and they're actually scheduling time to have lights and taking, they are in bobbins at this point. So, and there's a rumor going about that even the Europeans are getting weary of this war, and the fatigue of war is setting in Europe at this point. So, looking at that, imagine when winter comes in, people can get their lighting on, they can get their heating on. What's going to get, to people's mind? Some people will die, unfortunately, but then within Ukraine, people will start protesting and start saying, well, let's go back to the round table and sort this out. But Zelensky is not willing to sort it out. But I think if this continue like this and Russia keep bombarding their facilities and all that stuff, they won't be able to sustain this war. And imagine Democrat and Republican taking the House. That means the money coming from the United States is not going to be available for Ukraine anymore. That will put probably a stalemate to the progression of this war in Europe. So from that alone, that might bring Zelensky to roundtable talk, and we might see a direction from this market. So I believe things are this winter, I think this war, my belief is this war will not last 2 winters, because there's going to be a very, very difficult time for Europeans, and things are going to change. And this war will not last winter. Take that from me. This war will not last 2 winters, because it's going to drastically change, and things are going to wind up, and you're going to see how people are still going to run to the round table and study this out quickly. So I believe Europeans are getting tired of it. The war fatigue is setting in Ukraine, and I believe stock market from December towards next year, early next year, we may see a recession. 2023 or 2024, but it's going to be a shallow recession. That's my belief. It's going to be a shallow recession. Quick in, quick out. So if you can catch the bottom, good luck with that. Trying to dollar cost average, this is the best time. But be very careful, because I'm not your financial advisor. I'm just telling you what I'll be doing, not what you should do. Please, if you want to buy or sell any stock, seek the advice of your financial advisor. I'll see you in the next one. Please subscribe to the channel. Bye.